Hi, I'm Grant Bloxham from BStar, and welcome to an overview demonstration of BStar's patented business valuation technology, the Business Capitalisation Rate Calculator. The calculator scientifically determines the profit multiple or cap rate when valuing a business. The calculator has been created specifically for professional advisors to generate new fee revenue and grow their business profitability by providing structured, high-quality business valuation advice to existing and new clients. The calculator reduces the risk for BStar Alliance partners, the time and cost for their clients, and improves the accuracy by eliminating the need to estimate the profit multiplier. I thought I'd start the demonstration by spending a few minutes on the growing need for business valuations, the different approaches when valuing a business, and the calculator's methodology. Then we'll go online and have a look at the calculator, the inputs required to determine the profit multiple, the capitalization statement generated, and the calculator's unique features, including the risk and value driver assessment and sensitivity analysis. We'll finish the demonstration by viewing alliance partner references, the recommended process and fees for clients, and how professional advisors can access the calculator and their investment with BStar. The transition in baby boomer wealth to retirement means business valuations are in high demand, as business owners want to know what their business is really worth prior to selling. The calculator's sensitivity function provides alliance partners with a powerful value add to their clients' businesses by quantifying the future improvement in business value. Typical transactions include a range of needs-based advice services, including buying, selling businesses, to tax, succession, and estate planning. There are three common or recognized methods for professional advisors to consider when valuing a business. The capitalization of profits methodology is the most commonly used method adopted by professional advisors when valuing an SME business. The difficulty for professional advisors when valuing a business using this methodology is how is the profit multiplier determined. Whilst there's a growing need for business valuations, many professional advisors are reluctant to promote valuation services to their clients due to the risk of an under or overstatement of value. BStar's Business Capitalisation Rate Calculator overcomes this dilemma by scientifically proving the profit multiple or cap rate. It applies when valuing a business using the capitalization of profits methodology. And its underlying principle is a business must generate sufficient profits after tax to return investment funds to an owner investor over a defined term. The calculator assesses the impact on value of both quantitative and qualitative value drivers and applies to any business in any industry at a given point in time. The calculator's sensitivity function provides professional advisors with a process to quantify the potential for value improvement, creating a significant value add for clients. Let's now go online and complete a business valuation using BStar's Business Capitalisation Rate Calculator. To use the Business Capitalisation Rate Calculator, BStar Alliance partners go to the BStar website and log into their partner site. BStar creates branded partner sites for alliance partners to access the materials, tools, and programs. The branding functionality incorporates the alliance partner's business name, logo, and contact details. We will now have a look at the BStar branded demonstration partner site to access the Business Capitalisation Rate Calculator and to complete a business valuation. Once an alliance partner logs on to their partner site, they can access the calculator by clicking on the Customer Tools tab and selecting the Business Capitalisation Rate Calculator. The calculator's content page includes guidance notes, worksheets, and assessments for alliance partners to reconcile and prepare information prior to data entry. It is recommended completed worksheets containing the valuation assumptions are saved in a client's file offline for future reference. To confirm their client's engagement, B-Star Alliance partners can use the recommended engagement letter provided by B-Star on their partner site. The Business Valuation Engagement Letter outlines the purpose for the valuation, the calculator's methodology, what information is required from clients, what the client will receive, and fee terms and conditions. Once an alliance partner receives the signed engagement and an authority letter from their client, they can click on the customer or the calculator's application tab to complete the business valuation. The first data entry page is the business profile page. It contains some general information about the client's business, starting with the industry in which the business operates, the last year's trading income, the number of full-time equivalent staff, what the client thinks their business is worth, and the reason or purpose for the valuation. Help buttons exist at all data entry points, ensuring alliance partners enter the correct data. Once all the business profile information has been entered, B-Star Alliance partners then need to reconcile the accounting profit to the valuation profit. The profit reconciliation page is the second data entry page. The profit reconciliation worksheet allows alliance partners to enter a current year's profit figure, 2 previous years, or a forecast year's profit. The forecast year provides alliance partners with the capability to showcase the future improvement in business value by achieving a targeted profit figure. The profit reconciliation page provides alliance partners with guidance notes and help buttons at each data entry point to ensure accuracy of inputs and assumptions. Once an alliance partner enters the profit information and records their adjustments for valuation purposes, the calculator will determine a weighted average notional earnings before interest and taxation. This will be the profit figure for valuation purposes. The calculator also has built-in checks and balances. For example, if I reduce last year's profit to 0 and recalculate the weighted average notional earnings before interest and tax, you can see it comes up with a warning. It requests alliance partners to consider whether the weighted average profit is the true profit figure for valuations purposes, because it is higher than the most recent year's adjusted profit and net profit. Alliance partners can select to use the weighted average profit or a sustainable profit for valuation purposes. Once an alliance partner has confirmed their adjusted profit for valuation purposes, they can save data entry online and then need to progress to the BCRC input page. There are 4 remaining inputs prior to the profit multiple and business value being determined. Alliance partners using the calculator need to confirm they are valuing the business on a capitalization of profits methodology. They need to confirm that they agree with the methodology of the calculator. Once these boxes have been selected, alliance partners then need to calculate the free cash flow factor, cost of funds, indicative tax rate, and risk and value driver assessment score. For each of these inputs, alliance partners can access guidance notes, worksheets, and help buttons to ensure accuracy of data and their assumptions. We are now going to have a look at the free cash flow factor and risk and value driver assessment score in more detail. The free cash flow factor measures a business's ability to turn its profit into cash flow. Alliance partners can complete the free cash flow factor online to determine the factor specific to the business they are valuing. To determine the free cash flow factor, alliance partners need to have a copy of the business's profit and loss and balance sheet to complete their data entry. In this example, you can see the free cash flow factor is 1.35 based on a weighted average debtors days of 34 and a weighted average stock turnover days of 47. This means the business needs to generate 1.35 in profits after tax to return $1 of investment funds to the owner investor, as not all the business's profit is in its bank account. The principle of this input means a business's profit cash flow generation has a significant bearing on its value. The free cash flow factor worksheet will calculate the factor specific to the business being valued, enhancing the accuracy of assumptions. Once the worksheet has been saved and the result entered, alliance partners need to determine a cost of funds and an indicative tax rate. In this case, the cost of funds is 5% and the tax rate is 30%. Alliance partners can access worksheets and guidance notes to support their assumptions. It is the final input I wanted to spend more time on. The value driver and risk assessment score is the final input required prior to producing the profit multiple and value. The risk and value driver assessment measures the risk profile of the business being valued. The higher the risk, the lower the score, the quicker the payback. V-Star Alliance partners can access a range of assessment specific to different industries and for an SME business. Supporting the assessment are guidance notes to ensure accuracy of assumptions. The assessment provides alliance partners with a comprehensive questionnaire to assess the risk profile of the business they are valuing. The assessment grades both the quantitative and qualitative value drivers, producing a payback term for the business being valued. The assessment starts off by analysing industry risk and the impact on business value. It then analyses key performance indicators and movements in businesses' benchmarks, including sales, GP, wages, profit, and their impact on value For the industry-specific questionnaire, industry benchmarks are listed. The assessment also looks at value drivers relating to business growth, and are there opportunities for new products, new geographical locations? Has the business invested in R&D? Is the plant and equipment in good working order? Can the premises support business growth? By completing the assessment, clients learn more about what drives value in their business, making it easy for B-Star Alliance partners to secure client engagements. Clients usually complete the assessment and return it to Alliance partners prior to the evaluation consultation. During the consultation, Alliance partners and their clients can confirm the score. And as you can see, the assessment grades a range of qualitative value drivers, and it measures the impact on value on these key value drivers. For example, it looks at business systemization. Does it have procedures and policies in place? Does it have a best practice system? What impact does owner reliance have on the business value? Where does the business generate its income from? The degree of customer loyalty. And are customers price sensitive? It is a comprehensive assessment of both quantitative and qualitative value drivers. Once all the assumptions and assessments have been completed, a score is generated. The sensitivity function enables Alliance partners to review inputs and discuss opportunities to improve the score with their clients, again demonstrating the potential for value improvement. Once the score has been agreed, Alliance partners enter their score in the BCRC assumptions page. Prior to confirming all their assumptions, again, the calculator has a range of checks and prompts. In this case, it asks Alliance partners to consider whether the risk and value driver assessment exceeds the rent or lease period, and this is of particular importance for businesses that rely on their location to generate sales and profits. Once all assumptions have been agreed, Alliance partners press confirm to determine the profit multiple and value of the business they're valuing. The calculator produces a one-page statement listing the value, the profit multiple, and agreed assumptions. It also shows the potential for value improvement by defaulting to a 12% increase in earnings, a 0.05 improvement in the free cash flow factor, and a 1-year improvement in the payback term or risk and value assessment score. Alliance partners wanting to provide a more accurate assessment of the potential for value improvement can go back and re-enter inputs after discussing value improvement strategies with their clients. Let's now have a look at the sensitivity function in more detail. To highlight the sensitivity analysis function, I've gone back to the profit data entry page and I've dropped off 1 year, being the 2-year previous, and I've selected a forecast year and it entered in a targeted profit figure. When Alliance partners provide sensitivity analysis to their clients and they select a profit figure, there are a range of tools that they can use, including benchmarks, to determine an agreed or targeted profit figure. Once you've agreed the targeted profit figure, what I've done now is I've gone to the free cash flow factor and I've reduced the factor from 1.35 to 1.3 by focusing on debtors and stock management to improve the cash flow of the business. I also went to the risk and value driver assessment worksheet, and I selected a range of business systemization opportunities, which resulted in a longer payback term for the business through better systemization and lower risk. Once alliance partners have completed the changed their inputs, they then go forward and recalculate the result and produce a new business capitalization statement outlining the opportunity for value improvement. A business capitalization rate statement is produced, and as you can see, alliance partners can compare the current value of in this case 1.132 million and 2.96 profit multiple based on those assumptions to the potential for value improvement. In this case, there's been a dramatic increase and improvement in the profit multiple and value. And it highlights to clients the opportunity to work with alliance partners to create value in their business. And all I've done is I've slightly improved the profit, cash flow of the business, and reduced the risk through business systemization. And the difference is the potential in value improvement for clients. For alliance partners wanting to grow their business advisory services, quantifying the improvement in value is essential to engaging clients in value-adding services, strategies, and ongoing advice. VStar provided its alliance partners with a range of supporting materials to enhance their valuation services. Alliance partners can access on the calculator's content page a template valuation report where clients want to provide a more in-depth valuation report to their clients. The template valuation report provided by VStar to alliance partners is consistent with APS 225 International Ethical and Valuation Services Standard. In summary, VStar alliance partners have access to valuation materials, training, tools, and advice to provide structured, high-quality business valuation advice to their clients. VStar estimates the total time to complete a valuation should not exceed 4 hours, with a minimum recommended fee of $2,500. The valuation tool reduces the risk by scientifically proving the profit multiple. Let's now finish the demonstration by viewing references, the recommended process for offering clients valuation services, fee structure, and investment with VStar. The Business Capitalisation Rate Calculator is creating value for alliance partners and their clients' businesses as alliance partners learn how to provide more value-based advice to their clients. By providing more value-based advice to clients, alliance partners are able to generate high fee returns, leading to an improvement in business fee growth, profitability, and value. Alliance partners are enhancing their business succession plan by encouraging young professionals to take ownership of the service so they can spend more time growing the business and doing the things they enjoy. VStar recommends its alliance partners offer their clients a two-tiered approach to their business valuation services. An indication of value includes an assessment of business value, a business valuation consultation, and summary report. This service is offered to clients requiring a valuation not for formal purposes. Typically, this would include sale price calculations, value improvement discussions, ownership changes, tax, succession, and estate planning. For clients wanting a more formal valuation, an in-depth analysis of the business is required. The formal valuation process includes an assessment of business value and the preparation of a comprehensive valuation report and engagement and meetings. This service is offered to clients requiring usually a valuation for court purposes. Typically, this would include disputes and relationship breakdowns. Professional advisors wanting to access the tool need to make an investment in training and pay a package or monthly license fee to access the tools. In summary, the B-Star Business Capitalisation Rate Calculator and supporting materials provides alliance partners and professional advisors with an opportunity to generate new fee revenue and grow their business profitability by providing structured, high-quality business valuation services to existing and new clients. B-Star Alliance partners will receive structured training and materials to improve their professional valuation services skills and can earn PD points by participating in B-Star Valuation Services training. The calculator reduces risk for advisors and cost to clients. If you want to learn more about the B-Star Business Capitalisation Rate Calculator and supporting materials, you can contact B-Star directly or visit our website to register for the free 50-minute Creating Value for You and Your Clients webinar, a web-based presentation. We thank you for your interest in the B-Star Business Capitalisation Rate Calculator.